Hello, everybody. Today we're going to talk about the Bitcoin demand versus the Bitcoin supply balance that we're having, imbalance that we're having, and why I think Bitcoin is probably going to go much higher than we think. This is a recent post from Andrew Kang. I want to give him credit just because he does have a lot of good theories on this, and I'm going to go ahead and comment on him. It's on X, and if you guys want to check him out, you can. I usually like to read thoughtful people that, read articles like this that really have a lot of thought into it, because that gives me an opportunity to really think about how high Bitcoin can go and not try to time the bottoms and sell the tops type of thing. So Andrew here mentions a couple of things. He says the demand for Bitcoin for this year, it's approximately 40 billion to 130 billion dollars. Now let's kind of think about that for a second. Bitcoin is reaching about a $1 trillion asset class. And he thinks about this in terms of the cardinal sin of crypto investors and traders is underappreciating how much liquidity there is in the world. And he talks about that, how big these different asset classes like real estate, gold, and dollars are at. But in generally speaking, let's think about the United States as an example, since the U.S. is the top dog in the global economy here. The average U.S. household income is $105,000. Now, there are currently 125 million households. So if you think about the aggregate annual income in the U.S., it's about $13 trillion. And U.S. is 25% of global GDP. So that brings you to an aggregate of $52 trillion that's floating around the system. Now, this is very interesting because Bitcoin is an international currency. It can be used in many different countries. It can be converted back and forth. So they're going to be tapping into that $52 trillion market. Now, the ownership on a global scale is about 10. In the US, it's about 15 to 20%, depending upon how you look at certain things. And in the UAE, it's a little bit higher, 25 to 30%. So if everyone allocates just 1% of their income, that's about $52 billion buying for Bitcoin annually and $150 million daily. That's a lot. $52 billion, Bitcoin's not able to absorb that type of buy pressure. And it's not linear, because what's going to happen is you're going to have different variables like the ETF, non-ETF flows, and also understand that Bitcoin has reached to $1 trillion market cap before in our last cycle, and that was before ETF. So he's kind of projecting this as really, really interesting, because before the ETF, we were already getting incremental buys, and Bitcoin had every opportunity to dump, but it didn't. Now, he's also saying that the estimates are very conservative for a couple of reasons. And he's saying that instead of doing a 1%, most people are probably going to be putting in between 3 to 5% on average, with the 50% for some people. And the reason is because these allocations are going to depend upon what type of entity you're looking at. So it could be a macro fund, a pension, a sovereign wealth fund. And this is basically going to increase that magnitude by a lot, since if you're taking a look at a pension fund, they're probably going to be buying a little bit more on the aggregate side because there's so much more money there. Now, he's saying about, what about the sell pressure? What about Mt. Gox, Celsius, USG selling, minor emissions, FTX, all of that? And they're saying that all of that put together dwarfs the $17 billion. It's about $17 billion worth of Bitcoin that's being sold, which is not, it doesn't even come close to the demand side. You add the ETFs on top of all that, and now you're looking at about $100 to $200 million of volume daily on Bitcoin. And so the bear argument here kind of falls apart, because this is basically what he comes up with in terms of the actual aggregate prices. So I'm going to run a couple of numbers with you to see how this kind of plays a role. So if you run the numbers, you're looking at 25% of global GDP, and you're looking at crypto ownership, and people are going to be using 1% in all of their pension funds and their retirement accounts, brokerages, things like that, because Fidelity has just released a recommendation for allocation 1% into Bitcoin, and mostly everybody's going to start to recommend 1%. You're looking at an inflow of about 50 million with $12 billion worth and that can go up to 51 billion. So in terms of the overlap and the DCA, what you're going to find is the supply is going to be very, very small because of the fact that if you take a look at how much is coming in versus how much is coming on a daily basis, it doesn't even come close. So this really kind of begs the question, is that 1% that you see right there, is that enough to pump the price up beyond 50, 60,000? And the answer is absolutely yes. And the simple reason is because even with the emissions that you're getting from the miners, and even with the US government, selling off the Bitcoin, there just isn't enough supply to offset that demand. Now, there's a lot of variables with it. I'm not saying that this is going to happen instantaneously. What I'm saying, though, is because of the ETF, of what's happening with the ETF production and the creation of these ETFs, every single financial advisor out there, probably in the next couple of months, is going to start to recommend allocating 1% in crypto to offset the correlation with equity markets and the bond market, in addition to the fact that Bitcoin is considered to be the most hard asset that you can find, and digital assets are here to stay. Once that happens, it's going to be very interesting to see how this asset class is going to trickle, because one thing I do know about people, right, is that people want returns on their investments, and they would track back at Bitcoin since 2009 how much of a gap these people have been not buying Bitcoin, obviously, and how has that asset class appreciated. So if you would be a fool to not recommend at least 1% to your clients on an ETF that's sponsored by BlackRock and Fidelity, because of the fact that it has outperformed all asset classes for the last, since it was created, right? And the other thing also I want to mention is that this supply eventually is going to run out. The miners are not going to be able to sell this amount of value, because remember, the halving cycle that's happening this year is going to be down to 3 Bitcoins. Next year, it's going to be 1.5. And projected within 10, 15 years, the emissions on those are going to be so small that the miners are really not going to, that price needs to be so high for them to maintain their machines, that they may even just turn them off, unless they find a way to transact with Bitcoin and generate some more fees. But the mining pressure now is going to be so difficult, because the hash rate is going to be so high that the upfront cost of mining Bitcoin is not going to be profitable. Now, there's always going to be this portion where Satoshi kind of really didn't think about, and I think he did kind of alluded to that, but once the miners come off of this, Bitcoin is no longer going to be mineable in a profitable way. And the only way to do that is to put applications on Bitcoin so that they can generate fees, and the miners will turn into validating the network versus mining Bitcoin and generating fees on that. Just very similar to kind of like how Ethereum kind of works in that manner. But the part that I want you guys to understand is that these things are temporary. Celsius, Mt. Gox, as the market starts to mature and institutions come in, the exchanges are going to become, the shady ones are going to become extinct. And we've already started to see that in our last cycle, because most of these exchanges that started, they had some shenanigans in there. Like, for example, Celsius was running a Ponzi, and then Mt. Gox basically stole all the money. And as you recall, all these cycles that happened over and over again, they become less scammy over time. If you compare a Mt. Gox versus a Celsius, I mean, Mt. Gox was a straight up, just give me your Bitcoins, I'm going to buy a jet with it. While a Celsius was more like, I'm going to operate a Ponzi scheme. That's not to downplay Celsius, obviously, but what I'm trying to say is these actors are probably not going to continue. And if they continue, it's not going to be as big as a large number of them as we saw in previous cycles. So these emissions are probably going to go away once the government seizes that. These will go away once the government has already taken all the Bitcoin. Just keep in mind, when Bitcoin first started, people using them on the Silk Road, and that did not happen again. All right, so that's already out. There's no more Mt. Gox anymore. Celsius is pretty much that whole staking thing. It's already gone. And now what we're dealing with is just straight up mining emissions, and we're dealing with the fact that there is people trying to profit take, right? So this is a very interesting thing. I do believe that the market is going to put an all-time high of possibly 250,000 to 300,000. I mean, that's on the conservative side within the next like 5 years. And that to me is probably going to be the base case. Your high-end case could be potentially $500,000 to $1 million Bitcoin, because of all the money that's kind of circulating in the system. As the halving cycle starts to come in, we're going to start to see a situation where people are going to realize that you can't get this asset anymore. Now, also keep in mind that halving cycles generally happen only every 4 years. So what's going to happen is after this one, you're only going to get 3 Bitcoins out. And that's not a lot. I mean, 3 Bitcoins and you priced it at $50,000. I mean, you better make sure that you're running a really tight ship, because those payments are not going to sustain the mining rigs that you would need. So this is going to be very interesting. I think we are going to be seeing a world where Bitcoin is probably going to be worth more than what many people think. And as you are going about your life, if you don't own any Bitcoin, you're going to be left out. I mean, that's just the way it goes, right? All right, hopefully you enjoy this CB.